Welcome to this week's Market Minute with me, Andrew Wilkinson at Interactive Brokers. My guest today is Kevin Davitt, Head of Index Options Content at the Nasdaq. Kevin, welcome back to the program.
Andrew, thank you for having me back. I'm looking forward to it.
Well, today's date is December the 3rd, so we're into the final month of the year. November was a negative month for technology names, Kevin, just unable to reverse a loss of risk appetite. But following signs of consumer spending on Black Friday and Cyber Monday, the Nasdaq Composite Index is leading market gains. Would you say, is it too early to say that stocks are safe into year end, in your opinion?
A big part of me wants to say yes, because I've been around long enough to know sort of the general tendency toward the end of the year and positive flows. So my general inclination is yes. We typically see strong performance in December, especially going into December with a strongly positive year, which is the case. So you mentioned the Nasdaq Composite. I focus a little bit more attention where more assets are in the Nasdaq 100. That has outpaced the S&Ps by about 400 basis points, again, coming into December. So up almost 22% versus up 18%.
Right.
This is likely to be, barring some unforeseen month, I think the 14th out of the last 18 years where the Nasdaq 100 outperforms. Now, I want to be fair, and maybe it's the sort of attorney in me or just sort of an options thinker, that we still have concerns whether you want to look at the Japanese bond market. Your colleague, Steve Sosnick, focused on the carry trade and potentially more hikes in Japan earlier this week in a really good piece if the audience hasn't read it. If we get another unwind, that could be hairy. We still have Broadcom earnings. We have delayed unemployment data and another Fed decision, which isn't necessarily a foregone conclusion. Plus, you have the potential for headline risk that's not really been a concern for months, but I doubt, it's something that's sort of always in the back of my mind. So that is a back and forth answer. If I needed to put it in musical terms, is it too early to say that stocks are safe into year end? It would be an Oasis answer. Definitely, maybe.
Yeah, very nice. 2025 has been, the path of volatility has been all over the place. Are there key takeaways from that path of volatility for investors, do you think?
Man, the path of volatility, whether we're talking realized or implied this year, has been interesting. But then when I step back, in many ways, as a measure of volatility kind of always is interesting, at least to the audience and the circles that we run in. And those are increasingly broad in terms of investors that are following what's up with the market and following the velocity with which underlyings move. If I think broadly about the market, we saw short-term volatility measures that were in single digits early in the year, up near 80 in April around tariff risk. 80 is exceptionally high for a broad-based index. And then it was back around 6 in late July. I'm talking about Nasdaq 100 short-term, so like 10-day realized volatility. We've had a bit of everything. Now, longer dated realized or implied vol levels are going to be slightly more muted because it's a longer window, but move from relatively low levels to historically high levels and back again. Thinking through the lens of a trader, I would argue that this year has been pretty opportunistic from both the long and the short side. So like tactical types, and those that actively kind of monetized hedges likely outperformed. Vol moved up and came in with similar velocities, which over a long time frame is somewhat unusual, particularly on the decline in vol. typically it comes in a little more stair step. But my kind of expectation and thinking is that markets are now repricing risk more quickly than ever before. My belief is that that's here to stay, and it happens both ways on the upside for volatility as well as on the downside. And so I do believe that monetization, having a plan, if you are long or short volatility in general, really benefits the end user.
Kevin, I wanted to pick your brains on crypto. It's been an unusual bellwether this year.
Yeah.
And risk appetite very recently has been unusually down. Any thoughts from you on the intersection of crypto and equity risk heading into the year end?
You make a very good point, particularly of late. And I'll speak personally. I've followed crypto, as you sort of framed it, as a risk appetite proxy for many years. It has been fascinating more recently to see how derivative markets around crypto have matured. You look at the shift in the growth in assets in some of the biggest ETFs around this market. It has been huge. Some of the average daily volume numbers in the leading option-based products there in the top 10 on many days this year. And for whatever it's worth, it's the first year I have personally allocated capital to a crypto product with embedded optionality. I'm not advocating for that, but the market has evolved. I think it's exciting. I think that will continue into next year. And I think that's generally a good thing for market participants. Now, what you sort of alluded to in the short term has been a weakening of the correlation between broad-based equity markets like the Nasdaq 100 and Bitcoin. So if you look at measures like a rolling one-year correlation between the Nasdaq 100 and between Bitcoin prices, it's been as high as nearly 90, like 0.90, very, very positive correlation, but it's weakened significantly of late. It's closer to like 0.6 around now. Still meaningfully positive, but a meaningful divergence as well. So my last point is that imagine it was late last year, and I told you, Andrew, that silver would be up like 90% this year. Gold was going to be up 55%. They're both making all-time highs. Your assumption would probably be that Bitcoin was performing exceptionally well. As of this morning, Bitcoin is flat year to date and one of the worst performers in a group of risk assets. So the takeaway there is markets are amazing, and they're not going to do always what you expect. And it's a good reminder of that.
I want to take you back to something you mentioned earlier about the Sosnick article on Japanese yields, and readers can find that at the Interactive Brokers campus under Traders Insight. About 15, 16 months ago, August 2024, the Japanese yen strengthened, and it caused this abandonment of the so-called carry trade, where you sell the yen and fund other investments there. And as a result, stock markets cratered. The selling just kind of, more selling of the yen causes more selling of stocks, and it just becomes this circuitous. When does this stop? And the Bank of Japan this week seems to be signaling another interest rate increase is perhaps coming very soon, but nicely floated by them. But is that another potential negative looming on the horizon, do you think?
Yes. So on that point, I think the way you framed it in terms of why this matters and sort of the mechanics of it was excellent. I write a Nasdaq internal piece every weekend, and the focus is kind of the broad market over the last handful of days through the lens of options and volatility markets. Now, of late, I have focused a fair bit of attention on the Japanese interest rate market. JGBs have been making significant moves, and yields are at the high end of like a 25-year range. Now, For the audience, a little context, keep in mind that 10-year yields in Japan went negative in 2016 and 19, negative. And that carry trade that you outlined, Andrew, whereby typically sophisticated investors will borrow in yen, invest in higher yielding debt, and potentially realize that spread, maybe offset some of it with currency swaps or something. There's estimates about the global size of that trade, and it is considered to be very, very significant. You alluded to a bump or an unwind in some fairly ugly way in August of 2024. If the audience remembers, that was a morning. So much of the sort of selling, cascaded selling, came before the US cash open during Asian hours and European hours. And that was a day where in the morning, the VIX briefly measured 65. So to your original point, I would say that risk still does exist. And it's something that I keep my eye on. And I think, again, you could see a situation where I alluded to earlier that opportunistic hedging, you have a plan around monetizing it. You see that unfold, that could be an excellent opportunity. I'm not saying it's necessarily likely. The Bank of Japan has signaled their likely intent to raise rates. We'll see what that shakes out, particularly if the U.S. then cuts rates again, and what impact that has on the carry trade. Good question and something to focus on.
Kevin Davitt, Head of Index Options Content at the Nasdaq. Thanks again for joining me.
My pleasure.
And to the audience, if you enjoyed today's episode, please remember to subscribe wherever you download your podcast from. Bye for now.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Trading in digital assets, including cryptocurrencies, is especially risky and is only for individuals with a high risk tolerance and the financial ability to sustain losses. Eligibility to trade in digital asset products may vary based on jurisdiction. There is a substantial risk of loss in foreign exchange trading. The settlement date of foreign exchange trades can vary due to time zone differences and bank holidays. The interest rate on borrowed funds must be considered when computing the cost of trades across multiple markets. Cryptocurrency-based exchange-traded products, ETPs, are high-risk and speculative. Cryptocurrency ETPs are not suitable for all investors. You may lose your entire investment. For more information, please view the less than a ref equal https://gdcdyn.interactivebrokers.com/universal/servlet/registration_v2.form sample view question mark form db =sign 4100 and55. Disclosure regarding complex OR leveraged exchange traded products less than / greater than